Hi, my name's Deon and Rebello, and I'm the CEO of DCX Bullion. I have a really, really interesting guest today, and I'm going to introduce him now. But we are living in very uncertain times, and sometimes it's good to unpack these things because a lot of the information out there is thrown at us, but sometimes it doesn't really make a lot of sense when we see inflation or we hear about gold at all-time highs and what's going on in the world. There's a lot of economic uncertainty, a lot of geopolitical uncertainty and things going on. But my guest today, his name is Eelco Lodewijks. He is an economist. He's a passionate, seasoned a guy within the gold sector. Eelco, just give me a bit of a background as to exactly what got you into firstly precious metals, and what is your passion to carry this forward. We've had a couple of chats and just talking to you, going through a lot of the material. You've published a book. There's a lot going on, and it's always interesting to just get where did this all start? What was that seed got you going to think, I need to actually start talking about this. I need to get this information out to people.
Okay, so fundamentally, I'm a civil engineer. I'm not an economist. My interest in economics started in around about 1986, 87. And since then, I've been studying economics, even in textbooks. And I've got a friend who's an economist, and I give him a hard time. So we have some very interesting discussions. But the bottom line is, my interest in economics started because I realized that this whole world of fiat currencies doesn't make sense anymore. And somewhere along the line, we can't keep going like we're going now. And that got me to the point where from about 2000, I started investing in gold. And it just happens to be the bottom of the gold market. It wasn't because I was so skillful at picking it. And then eventually I sold a business in 2004, and in 2006 I bought a gold coin business, and I became a significant trader in South Africa in gold coins. And interestingly enough, I bought a lot of old silver shillings and things, and I kept all those silver shillings and things because I felt that silver was going to do very well over time, and we can come into that later in the discussion. So fundamentally, my interest in gold started because I felt it was a very good haven asset, a good protection if everything starts going wrong. In those days, I was predicting a depression. Now I'm probably more in thinking about an inflationary recession, which is the equivalent of a depression, because effectively everybody's going backwards during a depression, and they're going backwards during a stagflationary recession. So my gold has served me well. I bought gold and I bought silver. Those two investments have served me well over the last 24 years.
So, Eelco, just with regards to that, I mean, we also very passionate about bullion, namely, of course, gold, silver, and platinum. We see the relevance of silver as far as its pricing. It's undervalued within the market. We know it's an industrial metal. But we also know that it is an investment metal as well. We know that the history between gold and silver, they generally follow each other, where silver is slightly under, and then silver generally outperforms gold in percentage during these different periods of time over the last couple of decades, where gold was off in a run, and then suddenly silver starts to go slow and then passes it and actually outperforms it hands down in quite a large percentage. So we're looking at where we are right now. We know that gold is at an all-time high, and there's a lot of factors that are influencing that. What's your thoughts on exactly what is going on with the gold price? And then we'll go into silver after that.
So I'm going to give a little bit of a long-winded answer. I'm trying to keep it short. Fundamentally, gold only goes up when two criteria are met, right? And that is either it's a major war, right? And we're not talking about little regional wars like we have now in the Ukraine. Those might cause a temporary spike for a week or something like that, but they're not going to make a material difference. So we're not in a situation where we've got a major world war, so that's not the criteria at the moment. So the criteria at the moment really is the fact that when both equities and bonds are either offering the prospect or probability of negative real returns. That means they're not beating inflation. So at the moment, with rising inflation, bonds haven't been doing well because they were at very low interest rates for a long time, and now the interest rates are starting to rise. And equities are overvalued, so a lot of people are feeling that there might be a crash coming, and therefore those two criteria are arguably going to be met shortly.
Yeah. So I repeat those criteria. Both equities and bonds are going to offer negative real returns. So if you think that most portfolios comprise of sort of 60% or more equities and 30% or more bonds, that means that most portfolios might be in trouble. So people are starting to think about hedging.
And they're going to the traditional haven asset of gold. I think the second important thing here is that if you look at the chart, and I've got the chart up here to our right here, and if we look at the chart, we can see there that gold hit 2,075 there in around about July 2022, and then gold hit 2,075 again in March 2023, and then it hit 2,075 again in April 2020. Sorry, the previous one was February 2022, and this one is February 2023. So those created what's known as resistance levels. Gold kept on going up to there and bouncing back.
Yeah.
And once it breaks through that, that means it's a material break, and that resistance level becomes a support level.
Correct.
And so you can see on the right-hand side, you can see very clearly how gold has suddenly spiked and jumped up, and that's really important. So that breakout above 2,075 was a material breakout. Now, if we go and look at the monthly chart, you'll see here is a formation called a cup. And on the right-hand side, you can see something that looks like a cup. And then you see the magenta lines on the right, those parallel lines forming what's known as a handle.
Yeah.
And once you break out of that cup and handle, that means you're off to the races. So the target of this cup and handle now is $3,500. And the odds are that we're going to go after the $3,500, we'll have a small correction and we'll go over to $8,000 to $10,000. And we can get into the details of that later. So right now, that breakout that we've just been talking about is the material breakout that we've been waiting for since 2011. So we've been waiting for 13 years for this breakout. And now that the breakout has happened, it's confirmation that we're heading for a very high price. We can argue about what that price level is, but the bottom line is right now is a good time to get into gold. So now we're at silver. And this is really the interesting discussion. So if gold is trading right now at something in the order of 2,000 and a bit, and it's going to go up to 8,000 to 10,000, that means gold's going to go up fourfold or fivefold. Normally, when gold peaks, and we're talking about peaking at, say, 8,000 to 10,000, the gold to silver ratio goes down to 20 or less. At the moment, that ratio is 90. That means silver is going to outperform gold by something in the order of fourfold, which means silver is probably going to go up between 16 and 20-fold in the next 3 years. So my targets are for end of 2027, early 2028. It might be the end of 2028. We can get nitpicky about these things. But fundamentally, if gold's going to be a good investment, silver is going to be a much better investment. Does that answer your question?
Yeah, I mean, I remember in the August, July of 2020, and that was just after the initial lockdown period. And then gold, of course, then soared through the roof. It broke that first 2,000 resistance. And as you said, there was a pullbacks and it played around the 1900s. And then suddenly it jumped up last year, and then we got this final breakthrough. And as you said, that now becomes what was resistance now becomes the level on which it starts to grow from. What was interesting also is for gold, I think a lot of what's been happening currently in the world, where you see what's happening with the reserve banks. You see that they've been buying gold at a continuous basis over the last 3-4 years. And they're normally the precursor to a lot of what's happening in the economy, especially from a security perspective. Now, you mentioned depression, recession, and this has been on the cards since 2008, as mentioned, and it's come all the way through. And a lot of economists or people within the sector generally have been calling this big market crash. For me, I think it's become closer and closer to that point where, as you mentioned, the equity market is overvalued. We look at the S&P 500. It's at all-time highs. It continually has been growing, but it's also overvalued. You mentioned the bond market also. So these things are all coming into play, and it's almost setting things up. As you said, once there is this fundamental switch, of course, then gold will then start to play its role as a hedge against this uncertainty. Now, as we're speaking about silver, now, as I mentioned, silver is an industrial metal. We know that silver's growth over the last couple of years, which has been quite frustrating because I'm very passionate about silver. I know that based on the silver gold ratio, I mean, in March of the 19th of March exactly in 2020, it was at its greatest distance in the ratio. It was around 109 to 1. So 109 ounces of silver to 1 ounce of gold. It's sitting around the 70, 80s. And of course, we wanted to come closer into the mid 30s and lower to have real value, or what its value should be. But if you look at the growth of silver in the actual physical industrial market, I mean, silver has been growing at a rate of roughly 20% per annum as far as the demand on silver. And that's largely been driven by the photovoltaic market. Your solar panels, China and India have been two big proponents of buying up solar panels. We know even in this country, solar panels has become very big demand because of the power shortages and the concerns of current power supplies. So silver has always been running at this, and then it spikes, and then there's pullbacks, and it spikes and pullbacks. And a lot of the time people talk about market manipulation from the likes of the COMEX and so on, where we see the price shoot up, and then suddenly there's a flooding in of it, and there's a major pullback. So if the industrial side has been running, and it's been running consistently upward, we know the EV market is also a big part of that growth. Right now, with the global market a little bit from an industrial side being a bit unsure, how do you now see that silver is going to start to actually break through to the levels we've been expecting? That's above $30 an ounce, $40 an ounce, and so on. I mean, it's well known. There's a lot of commentators within the sector that have been calling silver for 3 digits, and they've been calling this since 2008 and even earlier. I do believe it will get there at some point. But what, in your mind, is the big driver to get that silver price higher over the next couple of years?
So I think I might have a different perspective from some. But, fundamentally, silver is called poor man's gold, right? That means that when gold is really running, then the people who can't afford gold because it's too expensive end up buying silver. With every major bull run that there has ever been, all right, gold has led and silver has followed. Okay, silver has outperformed gold every time, but the one that really starts the bull market is gold.
Yeah.
Now we can go into major discussions about supply and demand, but in gold there is no supply and demand discussion because all the gold that's ever been mined is above ground. So it's only a question of at what price is it available. So price is the driving factor in gold. With silver, it's different because there are definitely shortages happening in the market. And, the mines, there's not enough mining supply, arguably at the moment, and the demand is growing, as you mentioned, because of industrial uses and solar and so on, because every printed circuit in a computer and, AI needs a lot of these printed circuits. They need silver, solar panels need silver. There's a huge demand for silver at the moment, but I don't believe that's the big driver. And as you mentioned, the financialization of the markets, which means the big banks like Morgan Stanley and so on, and JP Morgan and Goldman Sachs. I'm not mentioning one in particular. I'm saying in general, the big banks are able to short the market, and JP Morgan is particularly known for this, where they short the markets, and then that causes the silver price to drop. My contention is that they can mess with the market in the short term, but they can't change the trend.
Exactly.
So in my opinion, when the price goes up and they knock it down, they can knock it down a bit, but it's not going to make a difference to the underlying fundamentals. So I tend to ignore that manipulation and financialization of the markets. I think that's just those boys making profits where they can, and I'm not going to point a finger at them and say that they're the ones who are destroying the market, because I don't know if that's true. So I think the fundamental thing here is, you asked, why is silver going to go up? And I think it's because gold is going to go up. And why is gold going up? It's because it's the ultimate haven asset in this time of rising inflation and the risk of hyperinflation, in this era of fiat currencies, in this era of deficit spending and spiraling sovereign debts. Most countries now, America, Europe, and so on, have sovereign debt levels which are in excess of 100%. And that used to be the level where, you were called a banana republic. And these people are not called banana republics simply because they're printing their own internationally recognized currencies. So, I believe that gold is now starting to perform as a haven asset, partly because of the fiat currency story, and partly because equities and bonds are not going to be the place to be for the next 5 or 10 years.
Yeah, and I do think that from an investment perspective, a lot of people are looking for alternative investments. They're looking for assets that they can rely on, that are not driven by market trends. And I think that's where gold has really found its place, especially amongst the common man, if for lack of a better word, because firstly, it's tangible. There's a value to it. You can take that ounce of gold, be it an ounce of gold, anywhere in the world, and it holds value anywhere. There's always a demand for it. There's always a willing buyer for gold. So it definitely holds value. Now, you mentioned something when we talk about sovereign debt. And I mean, that's part of what we do as a company. We also do a lot of case studies. We do a lot of research into various things. And we've also looked at specifically into sovereign defaults. And we looked at specifically Argentina. Now, you look at Argentina in January of 2020, it was 59 pesos to the dollar. And we look at now where we're sitting, and it's over, I needed to, 858 pesos. And we're looking at around 857 pesos to the dollar. So in the space since 2020 to now, we've had a massive devaluation of the peso to the dollar. We know that there was some government intervention towards mid last year where they forced the peso further, and at that stage it was sitting around 400 odd pesos to the dollar. The thing is, it's all well and fine when governments are doing this, but as the man in the street, the person living in Argentina, that messes up their life savings. From holding wealth, a million pesos in an Argentinian bank, and literally within 4 years, it's eroded in actual purchasing power to next to nothing. So, we looked at this and we said, if you'd gone and purchased gold to the same value of, say, 1 million pesos, and roughly there you're looking at about, it would have worked out then in January of 2020, around 11 ounces of gold. Right now, what's interesting is, as the peso has lost value to the dollar, and the purchasing power of that peso has fallen from the man that lives in Argentina. Suddenly, if they'd purchased that gold and they held onto that gold over this period of time, their wealth would not have been stagnated. It actually, in fact, would have grown, and significantly grown over that period of time. So I don't know your thoughts on that as far as sovereign defaults, because we're gonna go into South Africa, because that for me is where I'm going with this whole thing on sovereign defaults.
So I think what's important to say is that all currencies in the world are fiat now, and when you have a fiat currency, there is no fiat currency that ever survived. Every fiat currency eventually moved towards hyperinflation and then collapsed. So the dollar and the euro and even the Swiss franc are no different. Some countries are a little bit more frugal, but others are not. So even if you look in dollars, okay, gold was $20 to the ounce in 1930 odd.
Yeah.
And then by 1970, it got revalued, I think, in 1935 to $35, and it was $35 until 1970. And then Nixon broke the gold link on a sovereign level, and gold is now at over $2,000. What does it tell you? Do you think gold has gone up? No, gold hasn't actually gone up. The currencies have gone down.
Yeah.
So you used to be able to buy a lot more for $1, 100 years ago than what you can buy now. 100%. So when you look at the purchasing power parity, gold has held its value. And that's the important message which you're trying to convey here, is that it's not got anything to do with Argentina or South Africa with hyperinflation. You're really saying this is a hard asset that holds its value. And that's why, if you go back in history, 50, 60 years ago in South Africa, every portfolio, normally a portfolio has, let's say, for argument's sake, 25% in property and 25% in equities and 25% in bonds. Yes, nowadays they have far more in equities and bonds and far less in property and so on. But fundamentally, every portfolio in the old days, 50, 60 years ago, had 10% in precious metals and gold as a hedge against huge eventualities like wars and this type of thing, and crises and earthquakes and whatever. Now we've moved away from that. Nobody wanted gold. They said gold doesn't pay interest and it's not an interesting asset.
It's an interesting bearing asset.
Fundamentally, if you look at the returns that gold has generated since 1970, 71, when America got off the sovereign gold standard, it's delivered 6% or 7% in US dollars, and if you look at it since 2000, it's delivered closer to 10% in US dollars returns. Those are compound annual returns. Those are good returns by any standards, and it's a safe return. There's no risk attached to it, and that's what the nice thing is. So I think now, as we're heading into this period of uncertainty, I think gold and silver, obviously, start playing their pivotal haven asset role even more importantly. So whereas in the 60 years ago, people used to have maybe 10% of their money in precious metals, at the peak of the 1980 gold boom, all right, 25% of financial assets were in gold. All right. In fact, I think it went up to 28 briefly. All right. And today it's less than 1%. So what does this tell us? It tells us that gold at the moment is under-owned, and gold should be going up to being 25% of financial assets again, which means right now I think it's not a mistake to put 25% of your money in precious metals. And if you're putting 25% in precious metals, I would say put 15 or 12.5 into gold and put 12.5 into silver. I wouldn't put all of it into gold because silver is probably going to outperform gold. But the fundamental thing here is we're trying to get away from assets that have been manipulated, that are overvalued, etc. So I would get out of equities for the time being and sit in money market accounts and cash and gold and precious metals and these things, and have far less exposure to equities than we traditionally had.
So just on that, I mean, what was interesting is currently if you'd purchased 1 million pesos worth of gold, it will give you half an ounce. So from 1 million pesos in January 2020 giving you 11 ounces, right now you will be owning half an ounce of gold. What's interesting is that 11 ounces is worth over 21 million pesos. So that's a 220% growth over this period of time. Now, interesting, I want to just discuss South Africa because, ultimately you're raising a very, very valid thing here. Is we know that gold is undervalued. We know that within the market, in general investments, it's not discussed. It's not an interest-bearing asset. Yet you mentioned the actual performance of gold. In dollars since 1970, gold has given a compound return in US dollars of 8% per annum. If we look at that in rands, of course, with the devaluation of the rand to dollar, it's more than 20% that it's actually grown over that period of time. So how do you now foresee the whole thing unpacking with South Africa? We on the tinker where the rand dollar is sitting around 19 rand to the dollar. We've seen how it's devalued just over since 2020 to now. It's been significant. And why I raise this is anyone that's owning assets that are rand based or rand hedged, as the dollar does as the rand weakens to the dollar, those assets lose value in dollar terms. What's your thoughts and feelings about South Africa and us hitting a point of hyperinflation or extreme inflation where the rand does move to 40, 50, 100 rand to the dollar?
So I think there's no argument that we're heading the way of Zimbabwe. We're eventually going to have hyperinflation. I think it's unequivocally true. So the question only is the timing of this, and my economist friend says it's going to be less than 10 years, and I think it's going to be probably closer to 10 years. I think it might be a little bit longer even, and you've got to try and unpack it. So I made some notes here, and I'm going to, sorry if I read from these notes.
Not a problem.
I think it's insightful, this, In the short term, with gold rising and commodities rising, I think the rand is going to strengthen. So nobody understands why, but fundamentally, I think the rand is going to strengthen for the next year or two while gold is rising. Now, if gold rises infinitely, that doesn't mean that the rand is going to strengthen infinitely. So there's a temporary strengthening which will eventually be overwhelmed by, the fundamentals of the South African economy.
Correct.
But I think in the shorter term, we might actually see the rand strengthening right now. So then we say, okay, however, the ANC is now out of options, okay? They're not able to balance the budgets, with corruption and, high salaries and all these things. The budgets aren't being balanced, and all the state entities are continually bankrupted and needing more state funding. So they're already talking about annexing 150 million from the Forex Reserve account, which is really not a good idea. The more you reduce your foreign exchange reserves, the more it hurts your currency. So I see that as being very bad in the long run. We're already grey listed as it is, so we can't borrow offshore right now, So, we're close to 100% debt to GDP, and in no time flat, we're going to be at 100% debt to GDP. So then you've got to say, well, what are they going to do next, Well, the next thing they're going to probably do is they're going to introduce prescribed assets, which means they're going to force the pension funds to buy a certain percentage of government bonds. Let's say they start at 25%. And then they're going to gradually increase that. Let's say they increase it to 40 or 50%. That takes time. So each of these phases takes a little bit of time. And then they're going to start printing like crazy because they have no other ways of annexing money. And when they start printing, that's the start of hyperinflation or rising inflation. But hyperinflation doesn't happen overnight. You start with rising inflation, and then the inflation gets higher, and then it gets higher, and then suddenly you have a period of a year or a year and a half where it just goes through the moon. And we saw that in Zimbabwe, where $100 quadrillion couldn't buy a loaf of bread. So in Weimar Germany, people were burning wheelbarrows of Deutschmarks because it was cheaper than buying coal. So for heat, they were burning the money. So we're eventually going to get to that situation, So I think one has to say to yourself, okay, we are going to see hyperinflation. So in the long run in South Africa, gold is a very good hedge, and it's a tangible asset to hold. But in the short term, you're really wanting to cash in on the gold boom, right? So let's make your money. So the question is, when this gold boom finishes in, say, 3 or 4 years' time, then you've got to say, well, where am I going to put my money now? And then I think it's going to be sensible if we're facing, the prospect of hyperinflation. It's going to be sensible to have more money in gold and more money in silver, and silver will probably crash more than gold, so gold will probably be the preferred asset in the long run. And maybe you want to wait for want to sell at the top and wait a year or two before you rebuy gold, because that will still be a point before the hyperinflation really sets in, So it might be prudent then to sell at the peak and wait a year or two before you buy gold again. Property in the long run is always a good investment. So think tangibles. Think of things that can't be so easily manipulated. If you think of the stock market in Zimbabwe when a loaf of bread was $1 quadrillion, your share prices were at insane levels. So your stock market had gone up like crazy. But in dollar terms, it hadn't done so well at all, So then you start measuring things in hard assets. But even now, if the world is facing higher inflation and Europe and America are going to be approaching 10 or 15% inflation, they also want to be hedged into gold, So I think we're worldwide, we're looking at a time when it's a good thing to be into tangible assets and or cash and money market accounts.
So just practically, from your experience and how you see it, what would you recommend is the best way for someone to start that's listening to this thinking, okay, I've got an RA, I've got a bit of investments here and that, but I don't have anything as we mentioned, such as gold or silver, that I've actually started to put some of my wealth into. Where in your mind, would you suggest someone start?
Can I digress a second before I answer your question?
Yeah.
I think we're facing an era where the old days of the prescribed benefits pension funds and the company's pension funds are over. In the way back days, there were 4 and 5 people contributing to a pension fund and 1 person drawing. And those markets have changed. Now there are 1.5, 1.6 people contributing to pension funds, and there are very few people who are benefiting from it. There are a lot of people drawing, but no one's benefiting. So what's happening is the pension funds are fundamentally bankrupt at the moment. And if the stock markets and the bond markets crash as we expect now, pension funds are literally going to be bankrupting around the corner. So we're going to get to a point where it makes no sense to have a pension fund. So for the young people, I'm saying, you've actually, most of you are either entrepreneurs who are starting your own businesses or you're working for 2 or 3 companies. So pension funds aren't in your lexicon. That means that you've got to say to yourself, I've got to put money away now. From before I'm 30, I've got to start putting away money for when I'm 60 or 70 or 80, And with longevity, we can live to be 120 or 130. Not we, but you guys, you youngsters. And so you've got to say, you've got to start putting away money now. And that brings us to this whole same discussion where you're saying, okay, we can't invest in the stock markets now or the bond markets now, and we don't want to hold too much cash in this era of fiat currencies. So precious metals makes a lot of sense. And if they're going to go up so much, you can give your pension fund, your private pension fund, your little investment that you put on the side, you can give it a nice boost, and it can suddenly get a jump start where when you sell in 3 or 4 years' time, you'll have a nice little nest egg to run with. So to answer your question now, I think it's important for those young people and older people too to say, okay, how do I get into this game? It's a lot easier to get into this game through silver than it is to get in through gold, because gold is so pricey. And now you've got to have the discussion of, do I want to do it by way of an exchange-traded funds or buying shares in gold mines or in silver mines, or do I want to own the physical metal? In countries like South Africa, in my opinion, it makes sense for you to own the physical. And the reason for that is that you've eliminated third-party risk. So Correct. The minute you invest in a major bank, and they say they're holding the silver for you, they might not. JP Morgan was fined because they were not holding the silver for people, they were holding futures contracts. So not only did you introduce third-party risk through JP Morgan, but you introduced a second level of third-party risks through future contracts. So I'm saying, you've got to ask yourself, do you trust the people out there? In this era of incentive bonuses where people have lost sight of ethics, a lot of companies are doing things they shouldn't be doing. So I'm quite a fan of actually holding the physical metal because you're eliminating third-party risk. Now, you can hold physical metal through some other organization who's storing it for you, or you can hold it yourself physically. The advantage of gold is it takes up very little space. The disadvantage of silver, it takes up a lot of space. So if you've got a material amount of money invested in silver, it takes up a lot of space. And in South Africa, you've got another level of worry, and that is crime. I know a number of people who invested in silver and who invested in gold, and eventually it was stolen by their staff, or during a burglary or something to that effect. So how do you secure this stuff, And that's why a lot of people go to bullion banks, and they say, okay, I'd rather invest in a bullion bank, or I'd invest in an exchange traded fund or something like that. The difficulty with buying in bullion banks is if you've only got 10 Rand to invest or 20 Rand to invest, you can't even buy an ounce of silver. So if you want to put away 50 Rand a month or 100 Rand a month, then you need to be investing, by way of some sort of exchange traded funds or other mechanisms.
So just on that, we actually offer that specifically, where people can purchase grams of silver, gold, or platinum on a monthly basis based on their earnings or their available income to be purchasing that. So we see that, and we know gold's expensive. But we also want people and that was part of our drive as a business, is to make gold accessible to the man in the street. So, the recurring payment program that we offer gives that as an option for people to be accruing and growing their assets over a long period. Just out of interest, we did a case study on an RA. It was actually my personal RA. So, and it's with one of the big institutions within this country. So it's fully SFB approved, and it's got all the bells and whistles to go with it. I was promised a lot from it to grow. And what's very interesting is we've broken it down where we looked at it over its period of time, its life cycle, which is around about 14 and a half years. And from the date, from my first payment to now, I've spent roughly about 180,000 Rand in investment. Current value of that RA is around 220,000 Rand. We then said, if we'd gone and purchased physical gold, and what we did is we didn't just base it on the spot price, we actually added a premium to the spot price. And we said, if you bought physical gold on a monthly basis at 1,000 or 1,500 Rand a month over that same period of time, which met the exact payments of the RA, what is interesting is you would be sitting on, I just saw it and then I lost it.
We all lose it sometimes. But fundamentally, while you're looking, if I can just talk around that point and say, that...
rather, the 400, is that right? 405,000 Rand in value.
Oh, that sounds right.
No, because it was sitting at 280. Yes, 1,900, yeah. So what's interesting is with the same investment of around 180,000 Rand, over that same period of time, I would be sitting on over 400,000 Rands worth of gold in value versus my 220,000 Rand in RA value. Now, this is the message you've just said. For young people, if you're out there, I do believe RAs are redundant, especially in the world we're living in right now. And what is interesting is this is an opportunity where they can purchase small amounts on a monthly basis, be it through, there are a number of different companies offering similar type products. And for me, just make sure you do your due diligence. Make sure you make sure the company has all the necessary criteria to be met. For instance, we do look at the vaulting. We utilize Fidelity Security Group as our vaulting partner. So they are an independent party that vaults on all our clients' behalf. And they are the biggest security company on the continent. So we know that South Africa is not one of the most safe countries, but we also don't want to allow people to not be investing into precious metals.
Correct. I think that's important, I just want to come back to, on point what you were talking about just now is that, I'm not a big fan of retirement annuities and these things because, they're often not well managed. What tends to happen is these financial institutions invent a new product like unit trusts or mutual funds or whatever, and they keep on changing the names of these things, and then became exchange traded funds, and they keep on changing the names of these things, and then for a while they put their sharp kids on the block, and those things are performing well, and then the new trainees or whatever get put onto these old funds, and they don't perform well. So most people, or many people, can tell a story of where they've invested money every month into one of these funds, and it really hasn't performed well over the long term, partly because of fees, but mostly because nobody actually cares. As long as we get our fees, we don't actually care.
Yeah.
So, I think that one has to take a little bit of personal interest in these things, and you need to, I always say we spend a lifetime accruing money, but we spend no time learning how to look after it. And I think you should take a little bit of interest in figuring out, the key drivers of your investments. And one of those right now is stock markets are overvalued and bond markets are overvalued. What am I going to do? And that brings us to, as you say, investing in silver, and where do I do, and which is the right company, and how do I do it incrementally. So the wealthy people aren't the ones that we're worried about here, because they can buy whatever they need to buy, and they can survive inflation. But inflation is debilitating for the poor. It kills people.
Yeah.
So Alan Greenspan was heard to say, I thought I made a note of the...
Yeah, you mentioned
he
this,
said, Alan Greenspan, in 2006, well, long ago when he was young, in the 50s or 60s, he said, in the absence of a gold standard, i.e. in an era of fiat money, there is no way of protecting savings from confiscation through inflation. There's no safe store of value. Deficit spending, which is what is rampant in the world now, deficit spending is simply a scheme for the hidden confiscation of wealth. All right? Gold stands in the way of this insidious process. It stands as a protector of property rights, and if one grasps this, one has no difficulty understanding the statists, which is the government's, antagonism towards the gold standard. Later, in 2016, when he'd retired, he was asked, do you still stand by that? And he said, I stand by every word of it, and then added, gold is a good place to put money these days, given the value as a currency outside the policies conducted by governments. So there you have it, from somebody who really understands this stuff better than any of us. And, it tells a story that it sort of says to you that, we can't trust our governments anymore. And in this era of inflation and money printing and so on, we've got to protect our wealth. And as I said to you, not with a little bit of our money, with a considerable amount of our money. So as I said, put 20 or 5 or 30% of your money into precious metals right now for the next 2 or 3 years, until the markets have crashed and gold has peaked. And then you can reevaluate.
You say that, and I'm talking from experience with someone personally who purchased a couple of ounces of gold. They are retired. They are living off their pension. They're seeing the rand devaluing to the dollar. They see their value of their rands diminishing. And, at the time they bought a couple of ounces. Amazingly, that those ounces from when they bought them to now have performed better than anything that they've had to date. And I think it's one of the frustrations in the sector is making people aware that they need to be more significantly committed into this. I think there's a lot of, and you mentioned it before, especially from your traditional investment companies, and where they generally don't like gold because it doesn't give them a commission. It's not like an RA where every single month there's a benefit to them coming for every single one they sell. There's a once-off purchase, there's some money made from that, but that's where it ends from the seller's side. But the person that holds it, they hold that value and they let that value grow. So I think there's always that hesitation and there's contradictions from traditional investments to say, stay away from gold, it's not reliable. Yet the data's there. I mean, you've shown where we are. Just out of interest, when you speak on the growth of gold and you mentioned 10,000 $8,000 an ounce over what period of time? I mean, if you told me in 1994 when I matriculated and gold was roughly around $400 an ounce, that we'd be sitting on $2,000, nearly $300 an ounce, I'd say that's impossible. It just, from where gold was to where it is now, it just didn't seem possible. Now, that next jump, like you're saying, 3,000 suddenly, instead when we were sitting at around 1,800, 1,900, 3,000 was a considerable jump. Now to be looking at it around 2,300, it's not that far. Suddenly it does become more attainable. But the significant jumps to, say, 10,000, how would you be able to validate that kind of projection?
I think one needs to break it down a little bit and say, what actually happens when these things spike up like that? So you had tulip mania in the 1600s, and, there have been a lot of manias around the world where people have suddenly invested a lot of money in things, and the price no longer had any bearing on value. So in 2000, there were a lot of dot-coms that were selling for insane prices. And, Dimension Data was an example. It was suddenly, it went up and it went up and it went up, and everybody was saying, if you don't own data, you're nuts. And it eventually peaked over 70 Rand a share. And after the crash, it was down at 1 Rand 83 or less, So you've got to ask yourself, what was it doing up there? Tesla went up like crazy. Nvidia is going up like crazy at the moment. There are shares which go up. And if you look at the fair value in relation to the profits that they make, the share price has no business being where it is now. So those share prices at the end of the day are, in insane territory or, in irrational exuberance or whatever you want to call it. So gold is going to go up, and at some point it's going to be like Bitcoin. It's going to be a mania and everyone wants to own it, and then suddenly nobody wants to own it. So gold's going to go up like crazy. First, now it's going up for good reason, and let's say that the right value for it to get to is $5,000 or $6,000. It doesn't matter what number we pick. But eventually, irrational exuberance will climb in. People will want to just get in. FOMO rules, and everybody says, oh, you got to own gold. It's too late. Otherwise, it's too late. Get in before it's too late. And it's going to push the price up to 8,000 or 10,000 or more. So nobody has to say that 10,000 is a rational level. But if you look at what happened in 1980, in 1979, when the beginning of 1979, gold was at $196. And at the end of 1979, it was $850. So it went up fourfold in a single year. Now, I've done some studies where I've looked at the 1980 gold bull market compared to this gold bull market. And the time frames on this gold bull market are every time 2.8 times longer.
Yeah.
And the targets that were reached every time were 9.8 times higher.
Okay.
So if I take 2.8 times and say, okay, gold is now broken through, so give it 2.8 times that year from 1970, beginning of 79 to end of 79.
Yeah.
So we're looking at maybe 2.8 years from now before gold peaks. And I'm not saying I'm exactly right, but there's a perfect parallel between the 1980 market and this market where everything took 2.8 times longer, right? Except for a little hiatus due to COVID. So I'm predicting it's going to take 2.8 years for us to get there, and it might be 3. It's not important. And I'm predicting that we're going to get to closer to $10,000. 8,300 is the 9.8 times the $850, which we hit into 1980. So the minimum I think we'll get to is $8,300. But things are a lot worse now than they were then. In those days, in the 80s, we didn't have as much money printed. We didn't have this heavy levels of deficit spending and sovereign debt. We didn't have all the sort of local wars and global tensions and trade wars and the things that are going on. So there are a lot of things now that are worse than they were in those days. And it's my personal opinion that we're going to see gold going closer to 10,000 or even more. And the more money they print, if the markets crash now and America prints a lot of money to bail the banks out again, all right? The more money they print, the higher gold's going to go. And now we're saying we don't even have high inflation like we did in the 80s. What happens if in the next 3 or 4 years we start seeing high inflation? Is that going to drive gold even higher? I don't know. I'm not going to play that game. But there's a real risk that gold will go significantly higher than $10,000 if inflation really runs rampant now in the next years. And just for the record, inflation doesn't happen overnight. It happens in cycles. And I've got a picture here. This picture is showing you that in the top chart with the top box, 2 boxes, that's the stock markets going up, all right? And there you can see in the next 2 boxes where the gold's going up, and you'll see that gold's going up when the stock market's going nowhere, and gold's going nowhere when the stock markets are going up. The bottom chart shows you those lines, okay? That fundamentally gold goes up when the stock markets are going nowhere, and stock markets are going up when gold's going nowhere. So that's an interesting chart in its own right. This is just to show that inflation is actually significantly higher than what we believe. So if you look at the Chapwood Index, all right, the US government says that inflation is running around about 2, 3, 4%, and in fact for the last years it's been running closer to 10% in the cost of living. So the governments manipulate these figures, and they're not really
they're not a real reflection.
Yeah, they're not a real reflection of what's actually going on. So this is a picture that shows where the stock markets are significantly overvalued, all right? So there you can see the stock markets are higher than they've ever been, even in 1929, all right? And this is showing where the stock markets are probably going to. So the red line always follows the blue line. So the blue line is a predictor and the red line is following. You can see historically the red line always followed the blue line. So that tells us that the returns over the next 12 years are going to probably be negative 6.5%. And if we then go and look at the inflation figure, which I wanted to show you here, there you can see on the left-hand side, you can see that inflation went up like there. It went up, then it came down a bit. Then it went up, then it came down a bit. Then it went up, And even when it's coming down, it's still inflation. That means prices are still going up. So here we've seen inflation going up, and it's starting to come down at the moment. But I think we can safely bet that it's probably going to go up again, because we see commodity prices rising strongly at the moment.
Correct.
And we see wages rising strongly worldwide. So are we in an era where we're actually going to see inflation rising now again? And I suspect we are. I think we're going to see, stock markets dropping, which will pull inflation down a little bit, and then the inflation will remanifest. And it could easily be in 2 or 3 waves. We don't know what it's going to be in the future, because you can never predict the future accurately. But
absolutely,
I think there's a very high likelihood, because of all the fiat money printing worldwide, and the deficit spending and the rising sovereign debt, that we're going to see rising inflation. And then you've got to say, well, what's going to happen in the US and these countries? Well, my guess is that, at some point, the government's going to have to get together and say, well, as the rest of the world, we can't allow hyperinflation. And when inflation gets to, say, 15% or whatever, all the countries are going to have to start practicing austerity. And that's not going to be nice for the politicians, because bad news is never good for politicians.
Yeah.
And it's not going to be nice for the public, because they're certainly going to be getting less benefits from the government.
But I also think it's the culture we live in. If you look at 50, 60 years ago, things were built to last, whereas now basic things are built to break. They got a limited life cycle, and you got to go and buy a new one. I mean, we look at any electronics, and you guarantee that it's redundant within a year to 2 years later. So I think it's not just a governmental mindset; it's a global mindset that we all carry. It's this where we want it now, and if it doesn't work, we got to get a new one. And if the economy is not working, just put more money into the economy. We will print ourselves through this, and that's not going to work.
Well, it's going to end in tragedy, and it's going to end in tragedy probably in the next 5 or 10 years, and it's going to be very nasty for 90% of the public, because they already have been screwed for the past 20 odd years. Core inflation in the US has been 2%, and actual cost of living increases have been 8 or 10, pick a number, it doesn't matter.
Yeah.
And so they've gradually impoverished the people because companies take the core inflation rate and they don't take the cost of living rate to give you increases.
Yeah.
So companies have been milking the employees, and governments have been milking the employees, and pension funds haven't been giving pensioners their fair increases. So the majority of people, and let's say 90 or 95%, and somewhere around there, around 90%, of people have been getting poorer over the last years. And that's why a lot of people have got to work 2 jobs, and a lot of people have had to send their wife to work. And now we're going to have inflation. And that's, as we said just now with Greenspan's quote, inflation is a confiscation of wealth, you know?
Yeah.
And so the people are going to be even more hard up. And then eventually that gap that's now been increasing between the income of the 5% and the income of the 95%, that gap's going to have to start closing because, you know, right now the wealthy are just getting wealthier and the poor are just getting poorer. And that has to reset. So we're talking about a major global reset. And during this reset, which is going to be painful, you've got to ask, how do I protect my wealth? We're back to the protection of wealth story.
Exactly.
And that protection of wealth is important to us. And, you know, and don't put all your eggs in one basket. I mean, I have gold investments in gold and silver, and they're not all in one institution. You know, I have investments in shares, and they're not all with one institution. So it's important to remember that you must always diversify. Have some physical at home and have some invested with people like yourselves, you know.
Yeah.
You know, but start thinking about protecting your wealth and preserving your wealth now because it's going to get a smack in the next 5 to 10 years.
My biggest concern, and I see it's already happening in this country, and we're going to be wrapping up, but I do foresee that we're going to have massive social unrest. I foresee it in this country based on the lack of power supply, and now the lack of water supply. That's going to become a bigger and more compounded issue, which will create more social unrest. But if we go just globally, and you mentioned something very interesting with regards to the man in the street, where interest rate or inflation has been depicted to be a lower margin to real inflation, which we as the consumers feel, and which is not directly related to salary increases, which was, you know, so that for me is where the issue is. And I do foresee, and I think what COVID did bring the masses was they started to realize they cannot rely on governments to be looking after them. And you can see this trend throughout the world. I mean, we saw it in Canada. We see it in France all the time, where they will protest about anything and everything. But they're showing that the distrust of what our parents grew up believing, that get a job, work hard, and you can retire and live your life accordingly, that's all gone. And what I'm starting to see is people are starting to firstly realize, and we've mentioned this, is fiat currencies or traditional investments are no longer reliable to what we would led to believe. Alternative investments, which it's crazy that gold is even considered an alternative investment, considering it is in the top 5 of currencies in the world, traded currencies in the world. And the interesting thing is, for the man in the street, it is an alternative investment on how it's been depicted. But I do foresee that with a lot of what's happening in the markets and a lot of what's happened with governments is people are becoming more and more distrusting. And this does lead to an opportunity for people to start to take power back and start to assert their power themselves within groups, in communities, and start to grow and protect themselves within those communities.
Yeah, I must say, I mean, what you say is very important, and I'm going to just phrase it slightly differently as well, as that, you know, originally governments and municipalities were there to serve us. So they were using our tax dollars. So we were the people, the taxpayers were the people, employing the people in government, employing the people in the municipality, and they had to do our bidding. They had to look after our money that we invested with them, and they had to spend it wisely. Way back when, 65% of money by law worldwide had to be spent on infrastructure and 35% on salaries and wages. And over the years, the people in government have crooked the system, and now 65 or 70% of the money gets spent on salaries and wages and benefits for pensioners and whatever, entitlements as they call them. And only 35% gets spent on infrastructure. So worldwide, infrastructure is history. And now the government people are trying to protect their position. And what are they doing? They're increasingly trying to tell us what to do. So they're trying to mismanage our lives, and they're trying to create the rules, and they're telling us what we can and can't do. And this is an untenable situation, because the people we're employing are actually trying to tell us what to do. And they're inhibiting our freedoms everywhere. And as you say, we've got to take some power back. And if we don't stand our ground at some point, they're going to continue until we've got a 1984 state where the government is controlling everything. And we're eventually going to end up with statism and then maybe communism, who knows. But it's only going to go one way, because the state increasingly wants to control us. And they actually have no right to control us. They've usurped that right by themselves.
Just in closing, Eelco, and again, thanks for your time. I really appreciated it. But I know you published a book. I don't know if you want to just expand on it and discuss a little bit about it.
It was a book on how technology is going to change our lives in the next 10 years. And it's written more for an older generation, because we don't understand technology as well as the youngsters do. And I just had a lot of fun writing it, so it's not a book I'm trying to push, and it's got nothing to do with today's discussion. Today's discussion is about
but out of interest,
something that's much more important than understanding technology.
I think technology plays a valid part to all of this, and that's why I'm also, again, we focus on different segments. We spoke about it, different age groups, but the older age group is a big concern. I've got a father that's retired. We got family that are in that part of their life, the twilight years.
So the book was called Technology Tsunami Alert, because we're facing a tsunami of technology now, and it's just very interesting, what's happening worldwide and how these things are changing our lives, and it's going to be very interesting. And I think what we have to remember with technology is that it's not there to rule our lives. Technology is a tool which we're supposed to use to make our lives better, and to some extent we're slaves to technology at the moment, but that's the wrong way around. We have to remember that we're firstly humans, and technology is just there to help us be better.
Yeah, and again, I always remember watching the Terminator movies and thinking that this is completely and utter science fiction, or the Matrix. And now you start to see that maybe they weren't that wrong. But that said, it is important. And I think you raise a very valid point, is technology can be used to actually enhance our lives. And it's how we use it that's probably going to be how it's better determined going forward.
Anyway, thank you.
Yes.
I've had fun. It's been fun chatting. I keep on looking at you, and I think I should be looking at the camera, so I hope that...
It makes no difference. Again, I generally look at the person I'm interviewing. I will look at the camera now and again, but for me it's irrelevant.
Thank you very much.
Yeah, thanks, Eelco. I do appreciate it.
Take care.
Take care. Cheers.